I am Adam Smith, co-founder and VP of Corporate Development for Oroco Resource Corp. We have Richard Locke with us, Oroco's CEO, and Andrew Ware, our QP. Richard comes to us from his home in Montana. Andrew is on site in Choix, Sinaloa. Thanks for joining me this morning, gentlemen, for one of our irregular periodic calls and updates for shareholders. Much has changed since our last call. Oroco's on a new phase of work at Santa Tomas. Copper prices have risen substantially since our last call. So I thought we'd get together today and update shareholders with what we're doing on site, as well as have a brief chat about copper prices, where they are, what the forecast is for where they're headed, and provide our shareholders with some updated research and perspectives. So thanks for joining me, guys.
Oh, you're welcome.
So one of the big things that's changed since our last call is obviously copper prices. So I'll scroll down here to that part of our deck where we talk about copper prices. Oroco has long been an advocate of the so-called copper thesis. When we were assembling the mineral title concessions that make up Santa Tomas, we also started to study the copper market, and we were an early adopter of the thesis that the world will need more copper, and the rate of discovery of copper deposits is dramatically falling. Since that time, there's been a whole bunch of new themes. Back when we were assembling the mineral title concessions that make up Santa Tomas, the clean energy narrative was not nearly as strong as it is now. Renewable energy was not being talked about the way it is now. And so a lot of drivers of the supply and demand dynamic in copper are recent in the last 4 or 5 years. Here's a collection of headlines just from last year that talk about those forces that are leading to increased copper consumption. Since we started talking about these things, a lot of these factors have been confirmed. We are using more copper in exactly the ways that these headlines describe. Copper consumption last year hit 24 to 26 million tons, depending on who you talk to. When we announced the conclusion of the land assembly at Santa Tomas back in January of 2020, I think we were in the range of 21, 22 million tons of copper per annum. So the forecasts of increased copper consumption, its importance in the economy and new uses has indeed been confirmed, and that train is barreling down the tracks and picking up momentum now. Other new uses of copper just in the last quarter include AI and AI infrastructure. Trafigura estimates 1 million tons of copper per annum by the end of the decade for AI and related infrastructure. And also over the last quarter, this confluence of events, the increased copper consumption in places that we weren't expecting it last year, like China, where any drop in copper consumption in the housing market was more than picked up by renewable energy infrastructure, and China used more copper last year than ever before, which was not felt to be the case during the year when the slowing Chinese economy and the housing market were dominant narratives. So with all this together, and with challenges to supply that come from, lower guidance from major copper producers, the shutdown of major mines like Cobre Panama that's taken important supply off the market, has led to higher copper prices, as well as a reiteration of the narrative that copper prices are going higher based on increased demand and challenges to supply. So in the last quarter, we've seen important research from Jefferies, from ING, from Goldman Sachs, all calling for significantly higher copper prices, and higher copper prices soon, which I think we've seen that rise from 369, 370 to 450, 55 today has happened really in the blink of an eye. And I think the commodity and equity research is united in saying that it's as a consequence of some very, very real supply and demand factors. And it will continue, and we should be seeing record copper prices according to this research. One of the better pieces that I've seen in the last quarter is BHP's market commentary from February. It's available in a link that is connected to this video. And here's the closing paragraph of their discussion of copper. In closing for this chapter, we reiterate our view that the price-setting marginal ton a decade hence will come from either a lower-grade brownfield expansion in a mature jurisdiction or a higher-grade greenfield in a higher-risk and/or emerging jurisdiction. Marginal tons, of course, set the copper price, all else being equal. And if your last 5 or 10 or even 2 or 3% of copper production comes from higher cost sources, in order to meet that demand, copper prices should, in theory, rise to the cost of that marginal ton. And in future, we know that those tons are going to come from higher cost operations. Hence, copper prices will, by necessity, be higher. That's my interpretation of what BHP just said there. A decade, though, is a long time, and between now and then, with the conditions we anticipate in the final third of the 2020s, it's entirely possible that at times the cost curve will cease to be binding on price. An alternative pricing regime, which we refer to as fly-up, whereby prices disconnect from the cost curve due to systemic excess of demand or supply amidst critically low inventory levels, is a scenario that we feel the ecosystem should start preparing for today. That's a particularly interesting couple of sentences there, because that's indeed what we appear to be seeing happen right now. Copper prices flying up in quick moves upward. So I think this BHP piece, I encourage you to read the whole thing. It really is quite an instructive piece, and I think
and they certainly put money on the table behind that today with their interest in Anglo American's copper.
Indeed, yeah. Watch what I do as much as watch what I say is certainly the lesson there. So BHP, who are as well positioned as anyone in the world to understand copper supply and demand dynamics, have put this in writing, and then just months later committed, is it 32 billion, 33 billion?
Yeah, I didn't look in details on the deal, but it's I know it's all about the copper assets is what they want.
Yep. So, Oroco has, through its social media channels, published a few different articles on the theme of current copper prices and forecasts of copper prices. But I think bottom line is the long-awaited move in copper prices, move upward in copper prices, appears to be happening now. The fundamentals are all coming together. And copper, which has been a very good story up until now, that story appears to be being corroborated by the market. And, the next decade of copper prices, or the next year or 2 or 3, up to the next decade of copper prices, at this point looks to be quite strong and very supportive of assets like Santo Tomas. So with that, maybe, actually, we should probably cover this as well. Rising copper prices, as detailed in our PEA of last fall, obviously have an impact on the project economics. So in the discounted cash flow model included in the PEA, $3.85 a pound copper was the reference price. We also included these sensitivity tables in that report. The maximum we showed here, the maximum move for copper prices was 20% above that reference price. At $4.55, we're pretty much at 20%. If we look at this graph, what does 20% rise in copper prices from $3.85 lead to in terms of project economics? We were almost a double both in the NPV and the IRR. So that NPV was 1.24 billion. The IRR was post-tax was 17%. We're looking at a double both of those numbers with the current move in copper prices.
Yeah, that sort of corresponds very well with a lot of the discussion on what price do we need for new projects to get built, and we're in that price regime now, around the 10,000 a ton, 10 to 12,000 a ton. A lot of commentary has been on that, and clearly this is a barnstormer of a project at those numbers. You know, we wouldn't be using those numbers on a long-term price deck just yet, but certainly good validation that we're at the end of our chart on spot prices today.
Yeah,
I
absolutely.
think the other takeaway on that graph to the left there is that the slope of the lines related to commodity price rise much faster than the slope of the line negatively based on total capex and opex. So higher prices just keeps making the project better, given the assumption that the cost of the project increases at the same rate, which is really good news, actually.
Yep, and of course, we're not representing that these numbers are a current NBV and a current IRR. That would require an entirely new PA to be able to state it today. But as of the October PA and the sensitivity table contained in it, that's what the numbers are. And I would say copper prices have probably risen faster since then than the cost to build the mine. So I'll be very keen, along with everybody else, to see what the sensitivity table looks like in Oroco's upcoming optimized PEA.
Yes, and we'll use an updated long-term copper price in that PEA as well, which would be, if it was today, it would be higher. I mean, we'll find out in a couple of months what we'll use. But
so I also included this slide from our current deck to remind me to talk about just conditions on the ground in Mexico. Obviously, Oroco has a great relationship with its local community. We have developed relationships with the state government in Sinaloa, and over the last couple of years, the hesitancy over consideration of developing mining assets in Mexico has been the federal government. Recently, the leading candidate in the upcoming presidential election, which will happen in early June, Claudia Sheinbaum, has made a number of statements very supportive statements in regards to mining. So with the June election, we may be seeing a more positive attitude out of the capital, Mexico City, out of the federal government for mining in Mexico. Claudia Sheinbaum, presumably soon to be President Sheinbaum, has talked about the importance of the green energy transition and how mining relates to that. So those are very encouraging statements from an upcoming president of Mexico. She's also made some statements about giving power over approving mines to local communities, which is great news because we know our local community around Choix and in northern Sinaloa and the state of Sinaloa is very supportive of this sort of activity in mining in general and our project specifically. So hopefully we'll see that change after the election in June, and we'll see a more positive turn to the federal government's perspective on mining in what is one of the world's biggest mining jurisdictions, that is also one of the most prospective for the growth of production of things like copper. So that was a very positive development from the presumptive new president of Mexico. This slide shows the progression of the work at Santo Tomas from the initial work back in 2000 to the recent completion of a PEA. It mentions here also the optimization of that PEA. So maybe we could switch the focus here to discussion of ongoing work, both on the optimization of the PEA as well as field work. So maybe we'll start with field work, and Andrew, you could tell us what is ongoing at Santo Tomas.
Yes, so part of the optimized PEA, we're looking at the oxide resource, and part of that work is doing some further mapping and sampling, principally on the south zone, where we're finding some really nice oxide copper at the surface. It obviously doesn't have a drill hole through it yet, but that's all very encouraging. In the previous PEA, the oxide was considered as waste. In this upcoming PEA, we'll be considering a possible oxide SXEW type process there. If we look at that map there, going to the north, you can see Brazil is on the far right there. We're also doing some field work over there, some really interesting mapping and sampling. We're getting a much better understanding of the geological controls on Brazili's, along with the structural controls. And interestingly enough, that's all starting to make sense now with some of the extensive geophysical data that we have over Brazili's. So ongoing field work there, and we'll continue to get a better understanding and possibly develop some new drill targets in that area.
Yeah, which we potentially could go into later this year once we start drilling again. We've always been excited by Brazili's, but it was a bit of an enigma. I think that deeper understanding of the geological reality there will really be able to enable us to focus.
And not to make too much of it, but the field crew at Brazili's and have been talking about interesting gold showings.
Yeah, definitely. Sort of related to some contact skarns, quite a ways to the north of those drill holes there on the slide, and further to the west, which is interesting because that sort of starts lining up with the Reformer mine, which is further to the north, which is another contact skarn with some gold credits in it, but was principally a base metal mine. And it's all coming together on our thesis that this really is a district. So we go from South Zone, North Zone, Brazili's, our sort of new gold showings, up to Reformer, and then on to Barawachi, further to the northeast there. So that's 14 kilometers of strike length with some pretty decent showings of mineralization in there. Pretty exciting.
Yeah, and we've got those concessions through that area. So it's
yeah.
We have a great multi-billion-dollar project, we think, with South Zone and North Zone, and super great potential going to the north of that as well.
Yeah, and that's just a reminder that the Phase 1 drill program at Santo Tomás was certainly not meant to be exhaustive of the potential of the project, but was simply meant to meet what we thought was a minimum threshold to put together a PEA and a mine plan. So lots of exploration upside still remains, both within the pit where historical drilling, you can see these vertical holes in the middle here. Historical drilling showed mineralization in areas that we've got as waste in the pit, as well as in the south here where mineralization is open to expansion. And of course, as you mentioned, Andrew, all 14 kilometers between us and Barawachi. So there's lots still to unfold here. Phase 2 drill program at North and South Zone, both expanding mineralization within the pit and expanding understanding of the oxide potential. We included 80 million tons of oxide mineralization within the pits as waste in the PEA. That's a very significant number. If that oxide were explored for leaching, for example, that would lead to increased production, lower strip ratio, et cetera, et cetera. So the field work to understand the oxide potential in the South Zone is quite important, and that leads into a discussion of the PEA, because that's one of the factors being incorporated into the optimized PEA is leaching of that material, the immediate effect it has on increasing production, lowering strip ratio, et cetera. So Andrew, perhaps you could tell us a little bit about the ongoing work in PEA optimization.
Yeah, certainly. So the oxide is certainly part of it, and a lot of that relates to good resource stewardship. We don't necessarily have to start leaching it at the start of the project, although that would be nice. But in terms of capital expenditure, that's just another chunk you would have to account for at the front of the project. But in terms of other things that we're looking at in PEA 2, we're taking a very close look at the pre-stripping scheduling. It looks like we might be able to drop that pre-strip now to about 6 months before we actually start making ore for a mill. Of course, we'd have to accelerate the mill construction and to get that working as soon as possible, but that's a good thing. Also looking very carefully at haulage costs. Some of the previous design work in PEA number 1 included all truck haulage to a coarse crusher that was located off to the east of the north pit there. So there are some quite long hauls coming out of the south pit, and there's also a lot of capex expenditure on actually developing the earthwork required to develop the pad for the coarse crusher there, plus the overland conveyor. So we've recently looked at some options there, one of them being tunnel conveyance out of the south pit, which makes a whole lot of sense because you can cut down the haul there by half on a 12-kilometer approximately two-way haul there. So that's really good news. Also looking at trying to bring higher grade to the mill earlier, and that's what every mine does. So they're running some quite expansive and detailed work on that. That would be our consulting companies working for us. So I think we'll have some pretty good answers for this PEA number 2, and certainly saving on some OPEX costs, principally haulage, but also bringing some metal forward in the mine schedule, which is just going to help the MPV.
And Andrew, the other thing they're looking at is backfilling the north pit with waste material rather than stripping it all onto the waste pad. So that just we're looking at every opportunity to fine tune this. We had a fairly basic plan that we put out in PEA 1, and we saw some obvious improvements, which is big money in the end of the day, big numbers into the MPV. Talk about timing of the PEA. So we're working flat out. All the consultants are busy. All our guys are busy on it right now, and we're still pushing for mid-year to get that update done. And then obviously we want to get back into the field with the drills soon after that.
So in summary, the PEA optimization is going well. Those 9 items that we identified in the initial PEA news release are appearing to lead to some improvements in the valuation metrics and the production scenario and the mine plan at Santa Tomas, and that can be expected by mid-year. And we're dealing with that, of course, in a rising copper price environment. I think if the PEA was published today, based on current copper prices, the reference price of copper would probably be a little higher than the 385 we used in the initial PEA. Let's see where it goes by mid-year. But it certainly seems to be on a good trajectory at this point. So both copper prices and the direction of the PEA. So thank you, Richard. Thank you, Andrew, for your time this morning. There'll be some links connected to this video. I encourage you to read those documents. And thanks as always for your ongoing support as shareholders of the company.